Hello, mic test. Just want to check where anyone can hear me before I proceed to start the webinar. Okay, I think yeah, okay, so no issue on the sound system. So okay, so actually what we'll be covering today, right, is actually quite similar to our previous topic. Actually, we talked about technical analysis previously about MACD and RSI. So today we'll be covering the same thing, but because we look at your feedback after the webinar, and some of you actually mentioned as how to actually improve on our webinar. So actually for this webinar, right, it's actually a so-called improved version from all your feedbacks. So actually today we'll be covering the CFD trading opportunity using the top two basic TA indicators. And for people who are still new to us, you can join the Telegram group to do any discussion, whether is it technical or fundamental. Then there's the ongoing CFD promotion. So now we'll proceed to start our webinar. I hope everyone is still doing well during the work from home, and now we are going to the stage 2. So what we'll be covering today: support and resistance in technical indicators, trading discipline, and what is CFD. So when we talk about support and resistance, right, when we all enter into when we are doing trading, this one is mainly for trading. So when we want to enter into a trade, right, we need to understand that actually all this price movement on the daily movement is actually driven by the supply and demand. So actually sometimes you're using supply and demand, right, you can actually use the market depth to check out all these potential support and resistance level, because usually at the potential support level, you see everyone to start to place order around there, and resistance level people also put sell order over there. So you can actually make use of market depth. Later we'll show you how to actually see market depth later on. So support level is actually where all the expect that buyers will be waiting at the support level to buy in. So you usually see what people use is actually limit orders. Later we also talk about all these kind of different type of orders, because I think in our previous webinar we didn't really talk about orders, and some of you are quite confused about this orders type. So support level, then also resistance level. So we expect, so support level is when a downward is expected to so-called pause or a potential reversal due to concentration of demand. Then for resistance is also same thing. Seller will be waiting there to sell, so there will be excesses of supply over there. So another thing is trend line. Trend line is actually formed by connecting two or more price point. So this support and resistance trend line is also support resistance level. You can see that actually when the price when it start to go up, right, it usually do not go straight in a straight line up. Usually they'll form a so-called trend inside a channel before they actually continue upward. Then when they're coming down, there's also a resistance level each time when people, because okay, first of all, when you go price go up, so everyone will be rushing in to buy, then but some people will be actually waiting at the trend line support level to wait. So that's why actually you can see that when you make use of all this trend line, right, you can see a potential trade. So later we'll show you some example. So I believe everyone has been some of us are looking at Singtel, because during 2008 you can see actually the price level fall as low as 1.94. Then subsequently, due to this COVID-19, actually Singtel also has quite a huge drop. So one thing is that we want to look out for potential support and resistance level to enter. So first of all, we'll see how to look out for. If I just give you a graph directly, it's very hard to tell. So you need to look out for potential area that actually you can see that potential area that you will touch and show reversal. So you can see actually in 2006 around this level, right, you can see actually around $2, 2 point something, 2.25 this level, right, there's a potential support and resistance level. So when you come to this area, right, usually people will actually see, you see why you enter a trade, when people will see that this is a potential support level. So everyone will place their order at this level to actually enter a trade. So this is actually how you identify the potential support and resistance level. Then next thing you can see there's another range of support and resistance level. Using this, you can actually use all this to identify the potential support and resistance level. So you can see resistance level also over here, this level. So one thing is that when you talk about support and resistance level, right, it's not an absolute price. Let's say we see a potential like it's maybe around 2.3, but you can see that sometimes support and resistance level, they may come very close or sometimes they may exceed a bit. Because price so-called this support and resistance level is always not absolute number, it's always a range. Okay. So subsequently you see that actually these are the potential support and resistance level. You can actually draw your using the chart tools, right? You can actually draw the line, so you can see sometimes right it actually exceed a bit, sometimes they actually touch and go, sometimes they almost touch. So you can see actually price range is always a range, it's not just an absolute number. So you can see actually this. So these are the support and resistance level for Singtel that people always keep a lookout for. Next thing is that you want to look out for trend line. So you see that actually, yes, especially when it's on the upward trend, you can see actually they form a potential trend. So you use this to identify this or this point. Then after that, you use the tools. Oh, this one is the downward trend. So you can actually make use of the tools to actually draw out all these trends. So you can see actually when price go up, right, it doesn't really straight away go all the way up. You usually see actually a zigzag shape going up. When coming down, it's also the same formation. So when you come to here, right, next thing is when you see this is, maybe you actually saw this two area, but it already formed an upward trend. So the next thing, when you want to enter the trade, right, what you want to do, you actually want to enter close to the trend line instead of on the top, because on the top already, seller will be actually waiting to exit the position rate. So what you want to do is actually look out for trading opportunity on the support level and sell on the resistance level. This is actually how you look out for support and resistance level. It's quite simple. So you just have to, I think everyone have attended so-called school. During school time, you actually practice the plotting of your chart. You draw the points and try to find the best fit line. It's something similar to this also. Okay, next. So even in FX, right, not just in terms of equity, you can actually use this kind of support and resistance level for stock. You can use it for ETF. You can also use it for indices or also FX. So you can see that actually you can see when it's inside the support trend line, you can see actually the up and form an up and down channel. So next thing is we'll go into the technical indicators. So actually, for all the indicators, right, there are two major types of indicator. One is the leading and one is the lagging indicator. So leading indicator, right, what they do is actually they try to predict the move using the past data, trying to predict the future. But one thing is that because sometimes past data might be a bit misleading. So usually sometimes we are using leading indicator, right? It can give you a signal very, very early, but sometimes it's actually a potential false breakout that can mislead you. So some of these leading indicator RSI, stochastic oscillator. Then for lagging indicators, right, actually they follow the price movement and act as a confirmation tools. However, sometimes because due to this, right, they need to follow the price movement. So when they give out the signal, right, what you do is actually sometimes the signal is very, very slow already. So I will say that later we can look at some example why lagging indicator sometimes is made, there's some how to say bit so-called they give the signal very late and you might not you already miss out the potential opportunity already. So some of these are actually moving average, also the MACD that we will discuss today. So first of all, we will discuss the RSI, Relative Strength Index. So in the momentum indicator, it helps you to actually evaluate overbought and oversold condition in a stock price. So this is how you do calculation. What they use is actually, they do a RS, they actually help you to do the calculation of the up day closing gain and also the down day closing gain. Then actually for our RS, right, the default parameters is actually 14 days. So actually for some trader, right, we found that 14 days may not suit their trading strategy. So they may try to optimize maybe using 17 or 24 or certain numbers that they can actually test out and also really work for them. So generally what we consider above 70 is overbought. So and also below 30 is oversold. This one can also be further optimized. Some people actually use 80-20. So it's actually by right the default parameter is all this, but some people actually try to do their own optimization of their trading strategy. Later we'll also show you actually how you can actually try to do adjustment to all this. So let's say if there's one risk, because we talk about RSI, they tend to give you a give you a signal early, but sometimes they can actually mislead you. So if you are just using RSI to trade, there's a certain risk. Let's say you see this one actually RSI actually above the 70 already. So what you see, because above 70 means that actually the stock is actually oversold. So you expect some sort of correction. So some people may try to actually do a short during this period. So when you try to do a short, but subsequently you can see actually they do only price drop by a bit, but subsequently go up again. So you can see that actually if you are just using a RSI to trade, right, there's a risk that you can face, because you expect overbought condition means that people will start to take profit and sell, but end up you see that actually the price movement during this range is very, very small. It only drop a few dollars, after that suddenly continue to rush up. So that's the potential risk if you are using the RSI. So later we'll share example actually how you can actually use RSI to make a better trade. So overbought condition. So you want to do short, but end up encounter a loss because subsequently the price continue to move up. So another thing, if let's say you saw this, wow, the price actually recently due to COVID-19 actually has a drop, and you see it's oversold condition, so you want to enter a trade, but subsequently you can go up a bit and it come down again, drop even further. So that's why if you are using RSI to trade against the trend, right, that's the risk that you have to face. Oversold condition, so people do long, but end up you might encounter a loss, because when you are using just RSI to trade against trend, right, that's the risk that you have to face. So that's why we do not generally do not actually try to use RSI to trade against trend. We want to trade with the trend. So remember, RSI is a leading indicator. It can give you a signal very early, but sometimes it can actually give you a false breakout and miss, oh, now it's actually a breakout. So we try to enter, but end up we actually encounter a loss. So how to actually make RSI to make a better trade, right? There are actually two ways. One is actually RSI, we trade with the trend, overall trend line. Another way is actually the RSI Divergence. So same thing, Apple chart again. So now you want to trade with the trend. We don't want to trade against the trend, because the trade against the trend can be a very painful experience. So first thing, we try to identify actually this point and this point. So what we do, we draw the trend line. So you know that actually this one is an upward trend. So when RSI actually subsequently come down and actually do a reversal, right, what you want to do, because RSI is starting to go up. So what you want to do is actually you can enter a trade over here. So first of all, what you see, actually this one during this period, actually has been supported above the trend line. And also, you know that actually RSI has also been slowly doing trending up. And also if you are able to actually make use of another kind of technical indicators, is called candlestick. You can look out for actually, this one is actually a hammer. Hammer is usually a potential reversal, because you can see that actually there's a sharp movement down, but subsequently actually you can see that actually buyers start to rush in. So you form actually a hammer. There's also another candlestick pattern called inverted hammer. That one is actually a bearish reversion. So for hammer is a bullish reversion. Inverted hammer is a bearish reversion. So what you want to do, you look out for opportunity, actually start to show hammer, actually you can actually enter a long position. So this one is actually in terms of daily chart. So some people will be asking, what if I can use in maybe in FX market, maybe a 15 minutes? Okay, before we go to using the short-term trading, right? Actually, when you are entering a trade, right, it's very important to actually have a stop loss. So you can see actually there's a potential support and resistance over here. So what you want to do, usually what you want to do is that you want to put a stop loss around this level, because no matter what trade we do, right, it's very important to have a stop loss where you cut in case the market suddenly turns south again. because sometimes you know that, especially in the volatile market, especially with Trump always doing Twitter, he announced certain how to say certain rule or guide news, right? Actually, you can see actually market have a very volatile movement. Sometimes it actually target certain companies. So you can see it with this kind of volatile situation, right, it's very important to have actually a cut loss position. So later towards the end of this webinar, we'll also talk about 3 different cut loss orders that you can make use of this also. So one thing we want to do, whether RSI can be suitable for short-term trading. So now we go into the USD Sing 15 minutes. So first thing is that we identify there's actually a so-called potential support levels around this. You can actually draw our trend line. So subsequently, when the price actually movement come up over here and long term, so actually when you see actually price movement is supported and start to actually trend upward, right? You can actually enter a trade also. So this is a position where you want to end. RSI has been support above the trend line, and also RSI has started to actually trend upward. You can see over here. So this is where we want to actually trade with the trend instead of trading against the trend. So that's the things that you want to take note. Then subsequently enter a long position. So first thing, when we actually want to use RSI, right, always trade with the trend. We do not want to trade against the trend, because sometimes you can see price movement. Maybe sometimes if this one you can see there's some correction, but sometimes if you see actually the correction is not much, actually you end up you can see actually price start to shoot up even further. So you do not want to actually trade against the trend. So same thing, when you enter a trade, you want to actually have a stop loss. So what you want to do, maybe look out for the previous support resistance level. You can actually place a stop loss around this level. So next thing we'll go into is actually RSI Divergence. So there's 2 types of divergence: bullish divergence. So actually bullish divergence is when price start to drop lower, but you can see the momentum start to RSI start to go higher, because you see that price start to drop lower, but actually people are not interested in already shorting or selling already. They actually, instead, people are actually waiting to actually buy at a lower price. So you can see actually the momentum start to actually become higher. Same thing for the bearish divergence. So when price start to go higher, but you can see actually the momentum RSI start to drop lower. In this case, right, because price start to go higher, but people are not willing to actually buy at such a higher price. Instead, they are looking to actually take their profit. That's why you can see that actually the momentum start to drop and actually show a reversion. So for Apple charts, RSI Bullish Divergence. So bullish divergence. So same thing is that you can see actually there's a same thing, price drop, subsequently actually did another drop. What do you do? So you can see that actually price movement form a lower high, but RSI actually start to form a higher high, because people actually the selling power is actually getting weaker, and the people are actually looking to enter to buy this trade. So actually, if you actually just now make use of this potential trend line, right, this is an area that people will actually start to look out for buying opportunities already. So subsequently, you can see actually the chart start to go higher. So this is the bullish divergence. So bullish divergence, what you want to do, enter a long opportunity. Then next thing is that you also want, just now we talked about support resistance, cut loss. You need to actually look out support resistance level. Then you actually want to put a cut loss position in case price actually turns south. So there's also another bearish diversion if you see over here, if you're using bearish. So actually price, you see the price actually start to form higher, but actually when it start to go higher, RSI momentum actually start to become lower. So you can see the line unfortunately doesn't show properly, but you can see actually price start to go higher, but momentum actually start to go lower, because people are actually trying to the selling power is coming and people are looking to exit the trade already. So this is actually the RSI divergence. What you do is, if you look out for this RSI bearish divergence, you can actually consider a short position. So one thing is that when you enter any position, right, always have the stop loss. So same thing, whether short term or long term, this RSI bearish divergence, you can also actually use it in short-term trading. So first thing, you see actually price start to become higher. Next thing is actually the momentum start to become lower. It means that actually there's indication of potential reversal already. So subsequently, you can see actually they start to actually form a lower trend. So actually you can make use of this RSI to in the short term 15 minutes trading. It's not just for daily trading. You can use it in hourly, 4-hour, or even the minutes trade, 15 minutes trading. There's actually no time frame. As long as you can actually see a potential trend, then you can actually enter the potential diversion. You can actually look out for a trading opportunity. So you enter a short position. Same thing is that no matter what trade you enter, always have a stop loss or cut loss position. Next thing we will be sharing is actually the MACD, moving average conversion diversion. So what they show is actually the relationship between two moving average, because I think some of you actually make use of moving average to do trading. Like for example, using if you are doing long-term trading, people will look out for is actually the 200 moving average. Short-term trading maybe 17, 14, or maybe up to 50. So it's depend on your trading strategy. So for MACD, it's actually making of these two moving average, 26 period and also the 12 period. So the 9 period is actually known as a signal. So when actually MACD cross above or cross below, it helps you to actually provide a signal to indicate to enter a trade. So one thing is that for MACD also, when you want to actually make use of MACD, right, you want to actually follow the trend. You do not want to actually also go against the trend. So let's say you are actually using MACD crossover to do a trade. This one is actually an Alibaba trade, Alibaba shares. So over here, you can see actually MACD start to actually do a cross down. So some people will say MACD are crossing down, you do a short, but subsequently you enter another cross because it's only a small crossover. After that, subsequently you go up because actually the long term right is still forming an upward trend. So that's the risk if you try to do trade against any trend. Okay, so someone asked whether all this is a technical indicator, right? Is it just for CFD or is it for stock? Actually, it's not just specific for CFD because CFD, right, what you're tracking is actually the actual stock price also. So this one indicators, right, all these indicators, right, is you can use both for stock and CFD. Actually, CFD is actually what our CFD is actually mirror the market liquidity. Means what is the stock price trading, our CFD will be trading exactly at the same price. So you can see that actually MACD, right, sometimes is a lagging indicator because it can give you a signal, but sometimes it also can actually give you a potential to enter a position late and also end up you actually encounter a loss. So you can see actually the price actually dropped for a while already before actually the signal start to show. So MACD is actually a lagging indicator. So what you want to do is actually you want to follow with the trend, you want to trade against the trend. So same way to do trading with MACD. First of all, with the trend line and also MACD divergence. So same thing for Alibaba share. Now we want to trade with the trend. We want to trade against the trend. So first thing, you identify the point, and subsequently you draw the trend line. So you know that actually this one is actually a upward trend. So whenever you come to this so-called the support trend line, that is actually an opportunity to enter a trade. So you want to trade is actually when MACD start to cross upward. So first thing, wow, this is actually one opportunity to enter a long trade. Another opportunity to enter a long trade. So what you want to do is that you do not want to chase the price like somewhere here or in the middle. You want to trade with the trend, means again on the support trend. So next thing is that when you enter a trade, right, same thing, you always have put a cut loss position. And over here, right, actually you can see actually it did fall below a bit. But remember when we talk about support and resistance level and trend line, right, all these are not an absolute line because you can't exactly draw the best fit line because if you try to draw the best line, it's very hard because sometimes they'll exceed a bit over a bit. That's why actually over here I can actually see that actually when the price start to being support over slightly after that, and also MACD start to cross over, right, actually it's a potential long opportunity also. Next thing we'll be sharing is MACD divergence. Same thing for MACD, we also have their own divergence, bullish and bearish divergence. Same thing, when price start to drop lower, MACD actually start to become higher. So this one is actually a bullish divergence. And also for when price start to become higher, then MACD start to drop lower. Then actually this one is a bearish divergence. So you go to the Apple chart again. So first thing you can see actually price they form a high, subsequently do some correction, then they form a new high. But you can see actually the MACD actually start to become lower already. So actually this one is actually can see price become higher, MACD become lower. So this one is actually a MACD bearish divergence. So what we'll do when you see this kind of divergence, because this for stock, if you want to do long, you can do long, but to actually CFD, to short, right, you can't do a naked short sell on some of this foreign market. What you can do is actually make use of this CFD. So initiate a short. Then one thing is that when you want to initiate a position, right, same thing, always have a stop loss. Put a stop loss. And in case, right, what you want to do is actually you can see over here, if you actually attended the one of the webinar on 6 trading pattern, what you can see is actually this one is also a potential head and shoulder pattern, where it's also a kind of reversal pattern. So head and shoulder pattern is actually a potential reversal from the bullish to the bearish. And there's another pattern called inverted head and shoulder from the bearish to bullish. So you can see, make use of trading pattern with trading indicators to actually help you to make a better trade. So actually this one I think later we'll do more live charting. So actually we'll cover more of these basic terms first, then we go to live chart, it'll be better. So one thing is that no matter what, trading discipline is one of the most important. First thing to have trading discipline, right, we actually require 3 different factors. One is the risk reward ratio, stop loss for every trade, and also capital to risk per trade. So actually you do some you add on some more explanation on this portion. So no matter what, when you want to enter a trade, right, you always must balance out your risk and your reward. Whether is it justifier, you do not want to actually risk $10 to actually make a $1 profit. It doesn't make sense. So first thing, when we invest into market, there'll be always certain risks. So you want to be actually compensated for the risk that you are going to take. You don't want to actually, just as I mentioned, do not want to take $10 to just actually make a profit of $1. It doesn't really make sense. So what trader will do is actually they will make use of this reward risk ratio to actually compute the expected return of investment before you enter into another trade. So do take note that for optimum, many people ask, what is the optimum risk reward ratio? But in reality, right, there's actually no optimum risk reward ratio. You have to see what is your trading strategy. Like for example, I'm doing this trading strategy, then I use a risk reward ratio, maybe 2. Is it good for me? If it's actually making profit, then I will see. But if it's not, then I have to adjust this risk reward ratio. Later I'll show you some example. Also, another thing is risk reward ratio is everyone has different risk tolerance, so the risk reward ratio will be different also. So what will help you to actually protect you in case of a false breakout. So one thing is a risk reward ratio, right? Doesn't give you an indication of probability. Like for example, you buy a Ford Toto, just $1, it can actually give you a few $1,000,000 possibility of few $1,000,000. But in reality, you know that actually the percentage is actually very low. So one thing is that risk reward ratio doesn't actually give you any indication of your probability of your trade, whether is it going to be successful or not. So that's why we actually need to come up risk reward ratio. You need to also versus your winning rate. Means that, for example, let's say if your risk reward ratio you need to make a balance between these two. If you actually risk reward ratio, you take $1 profit, but you only get a so-called 50-cent return. However, if your winning rate is only just 50%, right, end up in the overall, right, you can actually still have a total loss of 50, so-called 50%. However, so some people will try to actually do optimize it, so they use a higher risk reward ratio. So actually 2, let's say, and your winning rate is actually still 50%. So you can, for every or in the overall trade, for every trade, right, for the trade, right, total profit will be 2,000, then your total loss is 1,000. So actually for an overall net, right, it's actually still a profit of 100%. So something is that you need to actually make use of this table, because I would say that not everyone have a probability of 50%. Sometimes your probability maybe 30%, sometimes 40%. So let's say you can make use of this table. Let's say for me, I'm doing a trading strategy. Maybe I only have so-called 1.5 risk reward ratio. Then my winning percentage is only 40%. Then in this case, right, you can see that actually it's just only break even. So I need to study how to actually, should I actually try to actually balance out, increase my risk reward? Maybe I increase to 1.5 to 2, then with a 40%, now my overall position will be a overall profit instead of just a break even point. So you can see actually sometimes when you are doing trading, right, you need to actually see your risk reward ratio. Then after that, you balance how much percentage are you winning. Like every 10 trade, maybe you're only making 30%. Then from there, maybe you want to actually do optimize, try to increase a bit of your risk reward ratio, and see whether this one in the overall profit, is it still profitable? If it's not, then you want to optimize your trading strategy. So you need to always compare your risk reward ratio versus your winning rate. Doesn't mean that you have a very high 10 risk reward ratio, but if your probability of winning a trade is only 1%, end up you'll be still in the overall loss position. So it's very important for you to actually do a balance. So no point focusing on just risk reward ratio if your probability of winning the trade is very, very, very low. So you need to actually balance between risk reward ratio and probability of winning a trade. Because sometimes you can see I want a return of 10 times, but in reality is the probability is too low. End up I'll just put base manager, end up I'll still encounter a loss. So to actually how to calculate the risk reward ratio, first of all, before enter a trade, you need to estimate the profit price from the current price. Next thing you have to mention, is very important to have a stop loss. So you need to actually estimate the potential stop loss from the current price when you want to enter the trade. Subsequently, you calculate the risk reward ratio. Then if it's below your threshold, let's say just now we say my optimal is risk reward ratio is 1.5. So in any case, if it's 1.1, then I do not want to take this trade. If it's risk reward ratio is 2, then I will take this trade, but I will still keep towards my 1.5. So first thing, let's say we talk about a trading pattern, we talk about this round bottom. So when round bottom, right, is actually so-called potential, when they actually reach certain resistance, right, they'll actually go into a correction phase. Subsequently, when they actually break out from this resistance level, they actually price will start to shoot up. So let's say I look out for this trading opportunity. So I see actually my breakout price is because when you see breakout, sometimes it's already exceed a bit already. So when I see breakout price is 1.8, but when I notice it's already 1.21. At that point, I have to estimate what is my target price. So for round bottom strategy, some of them people use is actually the height of this so-called round bottom, they add to the top from this breakout price, they add. So I'll get so-called from my point of entry of 1.21, I can actually expected potential rewards 0.18. Then stop loss, I always have a stop loss. So I want to keep some stop loss maybe around the previous swing before it actually break up. So this is my stop loss. So subsequently, you can see actually the risk reward ratio is around 1.5 times. So if this one means my threshold, I will take this trade. If it doesn't make, I'll just give up the trade. I don't want to take any trade that doesn't have a favor risk reward ratio to me. So one thing is that just now we keep on emphasizing for stop loss for every trade. I think many people still do not actually practice stop loss. So it's actually one of the most common mistake among most traders. So what a stop loss is actually an order that automatically helps you to cut your position when the trade hits a certain predetermined criteria. So actually we will be talking about 3 different order types. First order type is the stop limit order. So what it do is actually order to actually buy or sell a stock when they actually reach a specific price, known as the trigger. Subsequently, when the trigger price is entered, right, then your limit order will actually become active or become executed. Later, we will do some explanation in the live demo, because I think when I talk about this, I think people still can't visualize. So one thing is that before you use a stop limit order, you need to actually consider, because sometimes when the price movement is very fast, right, in the fast moving, sometimes your order may, when they hit the trigger, subsequently they actually shoot up this, right? So in this case, right, what you want to do, and end up you actually put a stop loss, but end up your stop loss when the price within that 1 second activated the limit order, end up you can see actually the order is not in time. So that's why it's some consideration you want to do when you are placing this kind of order. You need to consider where the price movement of the counters. So you need to actually consider your stop loss and limit orders to be selected carefully. Next thing is trading order. So trading order, right, trailing stop order, right, is very similar to actually stop limit order, but instead of keying a exact price, you use in percentage. That's a trailing trigger. Then for this, right, what you use is actually limit spread. Later we'll show you example of that also. So it's certain above certain number of spreads, maybe +1 or -1, then from there actually the order become active. So same thing, when you are considering trading stop loss or stop loss order, you need to consider the price movement of the counter. So limit price may not be executed if a price movement is very fast in a fast moving market. Also, that's why you need to actually always consider the limit spread, stop, trailing stop, and limit spread carefully. So the last order actually we consider is actually OCO. So for OCO, right, it's actually one cancel the other order. So it allow you to actually submit 2 orders at the same time to either cut loss or take profit. Let's say you enter the trade already, so you have a stop loss and a take profit position. So for OCO, so when one order is actually executed, the other order will be actually cancelled. So OCO limit order, what you do is actually use it to take profit. Then OCO stop order is actually the stop limit order, as we just now mentioned, to actually cut loss. So you can make use of OC order when you already have a predetermined your take profit region, also stop loss position. So actually many people actually think how to actually further improve on this trading strategy, because you have stop loss, you have risk reward ratio, also versus winning ratio. So there are also further strategies that actually help you to improve on your trading strategy. So there are actually 3 different strategies. First one, you talk about stop loss order. Another one is actually take profit in portion. And also take profit with stop loss. So we actually show this example. So first one is limit stop loss. So let's say you enter this trade. Subsequently, price start to move up. So what you want to do, you enter this stop loss over here. You will have, so one of the way actually we talk about Fibonacci retracement extension. This is one of the way that actually you can look out for potential support resistance level. For some people, they may not want to use this, then you do the manual way, try to identify where are the potential support and resistance level. They draw their own support and resistance level. So subsequent, when price start to move even higher, then you shift your stop loss. So you see your stop loss, actually you actually have so-called this portion of the profit already. So in case price suddenly has a gap now, suddenly has a drop, actually your stop loss will help you to actually protect your capital already. So in this way, you can see actually you secure a portion of your gain from 3.32 to 3.42 in case the price actually start to move. Suddenly has a reversal. Another way what you can do is actually taking profit in portion. Let's say price movement move up. Okay. Yeah, so what I will do in this stage, maybe when I reach the price movement go up, I will take maybe 50% of my profit. Then let my 50% of my trade continue to trail. So when price start to move up further, maybe I will take profit, maybe 30%. Then when the price even move up higher, I take the last profit of 20%. So you can see you take profit in position. So you slowly take profit. The last method actually we recommend is actually take profit in position, and also at the same time you put a stop loss. So same thing, when price move up, you take maybe 50% profit, then you put a stop loss. Subsequently, when price move up to here, you take another 30%. Then in case price suddenly has a drop or show a reversal, then actually you have so-called X profit, 50% plus profit, Y profit 30%. Then this hit or stop loss, yeah, in this case, right, you are still actually protected. You overall you still be actually a winning trade. So this one actually, if you do a real-term calculation, like this one actually help to increase your risk-reward ratio. Because you already secure some of your profit, means that it's already in your pocket. You do not have to worry or suddenly the market reverse. That's why you can see that it's good thing is good to practice take profit in portion and also have a stop loss. Last thing is that when we do a trade, right, do not want to actually put 100% in the trade. Okay, so regardless of any trade do right, because you can, unless you are very confident that you can make 100% winning rate, but in reality most, even the best trader, right, they always encounter a loss no matter how good they are, because sometimes market suddenly show a reversal. That's why actually you also need to consider how much other than stop, how much capital to risk on the trade. And if it's not controlled, you can actually lose 100% of your capital. So one of the most common way that is available online is actually the 2% rule. So what people want to do is actually not risking a loss of more than 2% of the total capital available. So this strategy may vary. Some people may be like 1%, some people may are comfortable with 5%. So this one you need to actually determine which one. I would say the most common is 2%. Let's say you have 10K. So in your first trade, you make a 20% loss. To actually go back to this 10K, right, you need to actually make 25% gain on your existing 8K to go back to 10K. So you can see actually in this case, right, it's very, very hard for most people. And also when you are actually too concentrated on covering, so-called gapping back your loss, right, end up the next few trade, right, you enter, right, might be actually losing trade, because you are not focusing on making a proper trade. You are only focusing on trying to win back your loss. So that's why that's a very wrong mindset that people have when they make a loss. So sometimes when you make a loss, right, sometimes you just, maybe for the today I make a loss, I will just close and don't make a trade for the today, because I need to actually calm down to actually recover myself back to the optimum mindset before I make the next trade. So sometimes if you really make a loss, right, take a break. Don't be too focused on trying to win the next trade. You should be trying to make a good trade instead of trying to win the trade. That's a wrong mindset. So for, if you, let's say you practice the 2% rule, so for your first trade you actually make a loss of $200, the balance dropped to 9,800. To actually go back to actually 100%, right, you just need to actually make a gain of 2.04. In this case, right, I don't think it's that difficult as compared to the 25%. So you can see actually it's very important for a trader to actually decide on how much capital to risk on the trade. So do not always take more risk than what you can handle. So some key points: always check for risk reward ratio before you are is it worth taking this trade. If it's not worth taking, just let it go. You can always look out for other trading opportunities. And do not over trade. Do not put like let's say your one trade you want to put almost 100%. You should actually try to split your capital. So called you have 100K for each trade. Maybe you only want to put 5K or 10K. You don't want to put 100K on one trade. Always have the stop loss for every trade. And also it's very important to have a trading journal to keep record of your trade. So in case like, because why trading journal is important is that, let's say you monitor, actually keep track of all your last 10 trades, and you see that actually this trading strategy is actually not really performing well, then you may want to actually try to see how to optimize your trading strategy. Is it in terms of risk reward ratio is not good, or is it whether this trading strategy is totally not working for you? Then you have to look out for other trading indicators that you can actually better identify. So it's very important to keep track of the trading journal. So see, if you are making a loss, then sometimes you have to see see what you want to improve on your trading strategy. Last thing, you will cover CFD before you go into the platform. What are CFD? CFD are actually a derivative product that is traded OTC. Allow you to actually participate in the price movement, whether it's up movement or downward movement. But one thing is that for CFD, right, you do not own the underlying asset like stock. Like let's say I own a DBS stock, right? Actually, I'm entitled to go for the so-called the AGM, but now you can't go for AGM. Also, you are so-called entitled for some certain rights. But okay, so for CFD, right, sometimes if you are not able to cater for all this, right, then you have to actually ask our client to actually liquidate because you do not own the underlying assets. It's actually a contractual agreement between you and PhillipCapital to settle on the difference between the closing at the opening price. So there are many types of CFD, equity CFD. So equity CFD will offer for not just Singapore, you can offer for a wide range of market, whether is it US, Hong Kong, Japan. So we have actually a wide range of equity CFD. Then for DMA, it's actually direct market access. So there's for direct market access CFD, right? We only offer for Singapore market. So there are some difference between the equity CFD and DMA. So if you are talking about the equity, right? Because let's just compare Singapore market, because both we offer for Singapore market. So for equity CFD, is actually just during the trading hour. You are not able to actually participate during the pre-opening and post-closing phase. Whereas for DMA, right, you can actually participate in the pre-opening before the 9 a.m. and also the after 5 p.m. you can actually participate in the post-closing market movement. So equity CFD Singapore, you can't participate in the pre-opening post-closing, but DMA actually offer this opportunity. So there's some difference in terms of the trading. Then we also offer world indices, like for example, we talk about S&P 500, then Dow Jones, all these kind of indices, popular indices. And I would say that for recent months, people will be more trading towards the US and also the Hong Kong indices because of the market news or this. There's quite a lot of trading opportunities. We also offer some commodities CFD like for gold and silver. Also, our last year new launch product FX CFD, currently actually adding more feature to this FX CFD. So advantages of CFD, you can actually do short selling. Short selling, I would say that you can take advantage of the downward movement. So actually CFD have 3 different advantages: leverage, short, also hedge. So do think that leverage is actually a double-edged sword. It can amplify your return, can amplify your loss. So in case you are trading stock, right, what you can do, you can only do one direction. You try to buy at the support and sell at the resistance level. However, if you are actually trading CFD, because it's actually buy direction, you can actually buy at support, sell at resistance, subsequent cover back at the support level. So actually CFD give you actually both way trading opportunity, especially in the market volatile market nowadays. You can see that some people are talking about whether is it bull market or bear market. In the recent Telegram, actually there's a news that they come out to share about this market. Actually is they call it the kangaroo market, because you can see actually sometimes within 1 to 2 days the price movement can drop a few 5 to 6%. Something you can go up again, come down again, go up again. So you can see actually it's like a kangaroo jumping up and down. You can see actually the market is very volatile nowadays. So for CFD, they are not restricted by market movement. They can rather profit from rising or falling market. So what is leverage? So CFD are actually traded on margin. So it means that you can use a smaller deposit and take on the biggest position. Leverage, but do think that leverage is always a double-edged sword. It can amplify your return, but also can amplify your loss. So let's say if you are doing stock trading, 10K, and the share price is $2. To purchase the whole 10K, right, you need to actually come up with a upfront of 20,000. However, with margin requirement of 10%, right, for CFD, right, instead of coming up with the full 20K, so you need to actually come up only with 2K to actually take on the position of the 20K. So the leverage is actually 10 times. So this is an example of scenario what will happen. Let's say if you just do stock trading. So you enter at position at $2, subsequently go to 2.1. So you can see actually you make a gain of $1,000. Subsequently, actually return on equity, excluding all these commission and financing charges, you are making a 5% gain. So in case price sometime goes south, you can see actually instead of going to 2.1, you drop to 1.9. And subsequently, you actually did a loss of 1,000. Based on that, you lose on your equity of 5%. However, if you are doing a CFD, because CFD, right, 10% margin requirement, I only need to come out just 2K. So you can see that when the price actually go up to 2.1, actually my profit 1,000 out of 2,000, actually you can actually amplify 10 times of your returns already. However, if you are actually making a loss of 1,000, right, you can actually amplify your loss by also 50% based on the initial capital you put in 50%. So you can see actually leverages, right, they can amplify your return but also can amplify your loss. So one thing about CFD is also they allow you to actually short sell. So a lot of clients, right, we actually face on daily basis. We actually have been calling a lot of clients on because a lot of clients actually make a mistake. Like let's say we talk about Singapore market. They have thought that actually Singapore market is T+2 on the due date. So they thought that they can actually short today and cover the position 2 days later. But in reality, right, if you do this, you are actually subjecting yourself to actually SJAC penalty of a few $1,000s, especially if you can't actually get share to cover this, or right, you actually can subject yourself to the penalty. It's very quite painful for some of the clients that we face. So what you can do if you really want to do short selling, please take note, cover by the end of the day if you are doing naked short selling. If not, you will consider using CFD to do a naked short selling where you can take advantage of the downside movement. Okay, I think I'm coming to end of the webinar portion before we go to the so-called the demo version. Let me see any question first. Okay, there's some question. How can we be sure of the benefit of the hindsight if the share is actually overbought, oversold? So just now, let me maybe rephrase a bit of your point. I think you are asking about whether, because you thought the share is overbought or oversold, so you want to actually, let's say you thought the share is oversold, so you actually want to take advantage of the movement, like you want to short first. So one thing is that if the trend, right, what you want to see, actually, what is the trend, overall trend? Is it actually an upward trend? Just now you mentioned that you do not want to actually, let me see, I go back to the slide. So that's why you can see this one you thought is overbought already. You should expect to go for some correction. End up you can only go for a short correction, or subsequent the price actually move higher. So that's why one thing is that it's very hard to tell whether is it really overbought or oversold. What you want to use is actually you want to trade with the trend. In this case, you are trading against the trend. That's why it's very risky. So what you want to do when you are using RSI, MACD, always trade with the trend. You do not want to actually trade against the trend. That's what I mentioned just now. Someone asked whether you can trade CFD for Bitcoin. Yes, but we do not offer Bitcoin this product. I think a lot of people has been asking about this product. Okay, for some questions are related to the demo. Later we'll show some demo. Let me see. Okay, some people ask, is this short selling illegal for equity trade? Actually, you can do so-called short selling, naked, what we call naked short selling for equity trade. But do take note that you need to actually cover the position before the market close. So it's not really illegal, but if you hold a position overnight, it's considered illegal. That's why you are subjected to a SGX penalty. Okay, maybe I think some people are asking parameters for MACD. Okay, MACD, just now I showed the MACD parameters, default parameters. Let me see. I think the rest of the question is more related to the demo. I will go to the demo shortly. So this is the default parameters, 26 EMA, 12 EMA, and 9 EMA. So this is the default parameters. I think the rest of the question will now go to the demo version so we can explain more. Okay. Okay, so this one is actually a demo account. So first thing we talk about, let me see. We are going to talk about order types first. Let me open up DBS. So you can, when you come to search for DBS, there'll be 3 DBS, or some people will get very confused. So the EQ stand for equity, then the CFD stand for the CFD, and DMA will be CFD DMA. So let's say you want to do a trade. So I think in our previous webinar, right, what we talk about is actually so-called DBS has been trading inside this. So you look out for any trading opportunity when they break out. So subsequent breakout, you can see actually after the trade of the breakout, right, you can see actually there's a very fast movement. So that's why sometimes you can make use of this frag and pendant pattern or different trading pattern, right, to look out for trading opportunity. So let's say you see that actually there's a potential. Let's say you want to enter a trade. Okay, I zoom in further. So actually, okay, how to actually zoom in further? Let's say I want to just see this area. You just click on mouse, you drag to the right side, it can help you to zoom in. However, if you actually want to zoom out, right, just click to the left side, it should help you to zoom up. So this is how actually you look out for. Then where to look out for trading indicators. So in case you are using MACD, let's say you can select MACD. I'm interested in also RSI. Where's my RSI? So relative strength index. So just now you see mentioned that some people like to do their own optimization of their trading strategy. So what they can do, actually they can click on this property. So currently, just now you mentioned the default parameter is actually 14 days. So some people, they try to optimize maybe 28 days. So there are different trading optimization people will do. They actually did some explanation over here. So you can also make, some people make use of scroll, some people actually do. But generally this setting we do not change, only change mainly the time period. Same thing for MACD if you want to change. Just now I mentioned is short 26, 12, 26, and 9. Signal is 9. So actually you can also try to do optimization using of this property. So okay, now I think so you all know how to actually do optimization in case you want to actually further enhance your trading strategy. So let's say I want to enter a trade for, you see actually for this, right, I will say that, so for here, right, what I can do is look out for, give me a moment. Maybe I'm interested in using Fibonacci. I'm looking out for trading opportunity to go take a long position. So what I want to do, I can use potential retracement to the breakout sub region. So actually from here, right, I want to, let's say I want to enter trade at around 21.66. So what I can do, let's say I want to enter 1,000 shares. Like, so instead of the real shares value, they help me to calculate what is the requirement, 10% requirement margin. Then I just key in my password. Yeah, then actually you can submit the order. So let's say I enter a trade at 21.660. I want to do a long position. So I just submit. The next thing is that because we go back to the chart. So let's say my take profit, I want to take profit maybe around 21.66. We enter a trade. We want to take profit maybe around, let's say $24. Keep it simple. Then my stop loss I put at $21. Let's say So what I can do, so there's a few different orders I can use. So I click on trade again. So let's say if I'm just want to put a stop loss. So first of all, I'll put a stop loss maybe 21.002. Then I put a 21. So this is the, so there's just I mentioned there's a trigger. So for the stop price is actually a trigger. Then subsequently the actual order will come in at $21. So you can see first row is actually the trigger. Second row is actually the actual order that I want to do a cut loss. So you can long position, you want to do a cut loss. So you put a stop loss, stop loss at just now we say 21.02. Stop loss, this order, exact order will come in to actually help me to cut loss at $21. Then I just key in password, then that's all. So this is the stop limit order. Then just now we mentioned also another order type will be actually trailing stop order. So you can see in this case, right, this one will be, you will not be setting a so-called exact price 21 point something. What you will do is actually make use of percentage. Let's say maybe 5%. So maybe I put a bit more percent. So let's say if we are following this 2% rule, so actually help you to calculate the downside 2%, where is your so-called trigger price. Then subsequently you want to actually make use of this. If you want to actually cut loss at 21.22, you put, then help you the exact order will 21.22. However, sometimes I want to be actually maybe one cut loss 1 point above this trailing stop loss, I make use of spread of 1. If below, I make use of this -1. So you can actually make use of this to actually cut loss in terms of percentage. So this is another way you can do. So the third order we will mention just now will be OCO. So just now we mentioned you want to take profit at $24. Same thing, $24. Then my cut loss 21.02, 21, then I key in. So at this point, right, when I key in this order means that if the price go up to $24, then my stop loss will be removed. If the price go up to 21.02, my stop loss comes in, then my take profit will be gone. So actually in this way, right, you can actually set your take profit and cut loss at the same time. So this one is OCO is actually one of the recommended ways for I recommend client to actually make use of this order when you are placing trading. So you can look out for this OCO order. So next thing is what else? Okay, let me see what are the question first. Then let me think what I have covered yet. Okay, OC orders stand for one cancel the other orders. Okay, so, there's some, okay, because for, I think some people are asking whether CFD are actually entitled for dividend. Yes, you are holding the stock, actually you are entitled for the, if you are holding a long position, you are entitled to for the dividend. However, in case you are short a position and the counter is actually giving out dividend, you need to actually pay for the dividend. So actually CFD are entitled for the dividend. However, if you are come to some corporate action, like for example, right issue, right? Because of like for example, recent case of SIA right issue, actually we are, because we are not able to cater for this kind of right issue, right? We actually ask our client to actually so-called liquidate the position before the right issue XD date. So we have to depend whether we actually be able to cater for this kind of corporate action. In case we are not, we'll give a client a notification that you actually need to liquidate this shares by a certain this CFD by a certain date. Okay, someone asked a demo on the screener. Can a person help to verify, because I'm not sure what kind of screener are you talking about. If you are talking about just normal stock screener, give me a moment. Actually, there's customization. Actually, you can do customization. Are you talking about stock screener or ETF screener? Because there are two types of screener. So maybe I talk about both lah. So actually, let's say you are interested in certain field of stock. Let's say I'm interested in just F&B, because we talk about F&B industry, right? Especially people can start to go out to eat again. So expect F&B industry to be price to be start to trend upward because of their potential earnings. So actually, if I don't set any criteria, you give me all the potential F&B stock in Singapore. Then maybe I want to set certain, like you give me certain dividend, maybe give me at least higher a bit. Maybe give me 1 to 4%, 4% dividend. I search. So these are the stock that give dividend around 1 to 4%. So actually you can make use of stock screener to look out for potential stock that you want to look out for. Especially if you do not know any stock, then you can set certain criteria. It's not just for F&B, different industry, or some people are actually interested in REITs. You can actually make use of this also. So that's a very good tools to do for stock screening. You just set your own criteria for this. Okay, first let me. So another way where people are looking out for ETF screener, like for example, you are interested to, maybe you are interested in certain sector, maybe you expect let's say you talk about properties sector, so you can see you do your stock, they provide you the whole list of sector related to stock. Then maybe you want to see just in which country, maybe just in Asia. Okay, first one. Maybe you want to select Asia. Then you can see all these ETF that are related in Asia. Then after that, you can see compare, like you interested in certain ETF, you just do a compare. So you can actually see what are you looking out for. There are different type of exchange, different type of ETF. You can select your criteria. From there, actually help you to do the screening of your ETF. So these are the two screener. I'm not sure whether is it what you are asking for. Yeah, these are the two screener that you can make use for to look out for. Okay, next thing is, okay, someone actually asked about DMA and CFD and DMA. So okay, DMA for this one is only applicable for Singapore market. CFD is actually applicable for all the market. Maybe I can show you first. So let's say you can see CFD. Actually, CFD, you can see there's indices. So in indices, right, just want to talk about Wall Street index. So Wall Street index is actually similar to Dow Jones. Then S&P 500. All these are available. Then Singapore, we have actually Straits Times, Singapore indices. The Hang Seng index is actually our so-called Hong Kong index. Then another one is popular, is trading opportunity in China market will be China A50. Then you can see actually CFD is available for all the different market, like Hong Kong, Malaysia, Bursa, yeah, US. So later I'll tell you where to actually get free live price, because you see just now I click all this, they say that I don't have live price. So later I'll show you. Then last one, if you are interested in trading FX, you can visit this tab. Then if you are want to trade commodities, gold is over here, silver is over here. So actually one thing is that many people, because they want to trade in US and so-called US and Malaysia, right, they want to get free live price. So you actually can go to this reward tab under new reward subscription. Because for you all, I would say that most of you are non-professional. For me, I can't get this free live price. So in case I want to trade in NASDAQ, so what I want to do, I just fill up this. So they'll ask you a series of questions. You just need to answer them, tell them what answer a series of questions. After that, you can certify all this information and true. If you're not professional trader, you'll be entitled for the free live price. So actually we have free live price for a few different markets. Give me a moment. Okay. So actually you have free live price for, you can see for the non-professional, we have for, let me see, Bursa, Malaysia market, Japan market, yeah, I can't remember SET. I think is one of them is Japan market, and one is, I think if I'm not wrong, is Thailand. I can't remember the exact term. Then for US market, we also have the free live price. So you actually can just answer a few questions only, you can get actually free live price. So why not take, if especially you are trading in overseas market, why not just take this free live price? Okay, so one thing is, what is the I think I come back to the question of what is different between DMA first. So actually for DMA is actually just offer for Singapore market. So I would say that there's one of the key difference for CFD and DMA. So for CFD, right, you will involve market makers, because let's say your position, they come to the us, then from there the market maker will see, let's say there's one client A who want to do a long position and client B who want to do a short position. What the market maker do, they'll submit this order, match these two orders together instead of hedging out in the market. However, sometimes if there's no orders, then they'll do the hedge out in the market. As for DMA, right, the order will go directly to the exchange, the SGX. That's why when the order directly go to the exchange, right, you are able to actually participate in the pre-opening and post-closing of the of the trading. For CFD, right, you can't participate in the pre-opening and post-closing because market makers will still need time to match out all these orders. The system will still need time to match. But for DMA, you can actually go directly to exchange, so they are able to participate in the pre-opening and post-closing. Okay, what is the time frame that you recommend to see a trend? So actually, I will say that the next thing is that depend on what kind of trader or investor. Even investor, you can also make use of how to say, TAs to actually indicate. Maybe I'll talk about one example first. We just talk about sets because I am be looking at sets. So I clear everything first. So what you can see actually, let's say you just now practice support and resistance. You can see actually potential support resistance level around this level. So you can see it doesn't mean that it always touch, because you say that support and resistance level is a so-called a range. It's not. So what I want to do, so you can see actually price. So I will look out to enter at the buy at support level, sell at any potential resistance level. So maybe my resistance level around here, you can see. So what I want to do, so you can see at potential support and resistance level. So you can see actually it's trading inside this range. So we buy a support, sell at resistance level for this sets. So if I'm a so-called, I want to invest for long term, I also can make use of my so-called, because then I will be looking out for long-term trend, open up the chart. Then if I'm long-term trader, you see my time frame, right? It's not just 1 year. So simple. Give me a moment. Oh, give me a moment. So you can see if I'm a long-term trader, I will see look out the chart. Investor, I'll look out for all the potential buy support level to enter a trade. Okay, sorry. I think there's some issue. Okay. Yeah. So what I want to do is look up for potential support resistance level that I enter the trade. So even for investor, right, you can make use of TA to look out for any entry points, not just TA. So in case I'm a day trader, right, maybe I want to look out for. Let me reopen the chart first. Okay, I think my mouse. Okay. So it will depend actually what kind of trader you are. In case you are doing intra-day trading, right, then you may be looking out for maybe 15 minutes chart instead of the daily. But I would say that for Singapore wise, it's very hard to do. It's very hard to do intra trading. If I want to actually do intraday trading, right, I prefer to actually trade in the Hong Kong market. So previously I actually mentioned trading in Hong Kong market. You can see just 15 minutes, there's a lot of movement, a lot of trading opportunities. Then we open up. So for more volatile market, right, my trading hours will trading will be actually more towards a short-term time frame. But for less volatile market, my trading time frame will be longer, like daily or mid. Yeah. So there's so-called no fixed time frame lah. So I'll say for volatile market, I will be looking around 15 minutes or half hour or 1 hour. Then for long less volatile market, I will be looking in terms of daily trading already. Okay, let me see. Which bullion trading chart can see chart? Which bullion trading platform can see chart like RSI? So I think just now I showed actually all the different indicators. Like because we only cover 2 indicators. Actually, in reality, there's also a lot different indicators. Like some people actually use Bollinger. It's also quite another interesting trading strategy. You can see actually they trade inside certain range. So Bollinger is another trading strategy. Maybe what we can do, we do a webinar on Bollinger next time. So it's another opportunity to use different type of trading indicator. What you want to do is actually find a suitable indicator that you can actually help you to see better and trade make profits. So let me see other question. Someone asked, is DLC similar to CFD? I would say that it's actually 2 different products. Because for CFD, right, maybe I want to show you something first before I do explanation. I think many people so got caught in let's say we talk about it. So you can see the price for this stock and CFD. You can see actually the price is actually same. So what we CFD do is actually mirror the market liquidity. Means that what is the stock price trading, CFD will be trading the same price. So for CFD, they mirror the market liquidity. As for DLC, right, you can't really see like what you want to see. You trade DLC, but you can't actually see the price movement. You have to actually refer back to the stock. Then you also have to see whether actually they actually really mirror the stock. Next time you do DLC, right, you do a comparison whether they actually really mirror the price movement of the market. You can do a comparison for yourself. Actually, they might not be exactly same. So there's a difference between DLC and CFD. There's one question, why is SU and RE for sets? Maybe the person want to re-clarify. Is it support resistance level for sets? Just now I think I covered that. Let me go back to my chart again. So I just want to show you the potential support resistance for sets. So I'm not sure whether it's that question that you cover. So potential resistance level, I'll look around 3.5. So support level will be around 2.6. Yeah, so this is a support resistance level. So you can see actually you can be trading inside this range for quite a while. Yeah, so someone asked to take profit in position. So let's say I enter 1,000, so-called buy 1,000 of the long position. What I want to do is take profit in position, means that it reach certain price, I take maybe 50% of my position out, then I take this profit. Then it reach another certain price, I take another 30%. So I'll be actually entering a few trade. No, I enter only one trade, long trade, but when I cover so-called sell, right, I put a few different sell trade. So this is take profit in position. Okay. Someone asked, what are the difference between the Phillip platform that's Boyer MT5 and Nova? Okay, I would say that MT5 and Nova are more towards the Phillip future, and Poems is more towards the security side of the Poems platform. Okay, I think someone asked about sharing of the presentation. So for presentation, we will have the recording webinar online. Let me see other question. Okay, so someone asked, what happened if Phillip suddenly cannot support the CFD position because a share owner wants the share backs. So how will you decide which contract to close? So what we actually do is we always keep a buffer. We do not just let's say we're actually, because for CFD, right, actually we need to actually have the underlying assets. So what we will do, we will actually borrow from so-called you get from the different pools. Just we have in our Phillip Security, we actually have our own SBL, share lending and borrowing, and outside we actually can also get from the SGX borrowing, share lending and borrowing pool also. So what you do is like usually right, one owner get back, we will have multi other owner that are always available to lend these shares. We will not usually we do not come to this situation that suddenly all the owner want to come back, because we will have we will get from these two different pool, and also we will actually control the number of contract that we actually can do. Let's say maybe we have maybe 1,000 contract. We will not actually keep all these 1,000 contract for our client to do trade. We only keep a certain buffer. That's what we actually do risk management on our side. So someone asked, if you can't actually close a CFD position overnight, what are the overnight charges? Let me close this. So let's say you just talk about DBS. So do take note, you can see actually the long and short financing charges this is based on per annum. The long and short financing charges is also different depending on the market supply and demand. So you can see if you are holding a long position, 4.5%, then you just divide by the 365 days. If you are holding 1 day, then short position 3% divided by 365 days. So these are the overnight holding charges. Okay, let me see what other question. Okay, what is GTD? Okay, maybe I can share about GTD. Okay, give me a moment. So you can sometimes we are doing stock trading, there's a GTD. So actually GTD allow you to place order up to 1 month. So let's say I want to buy DBS at, I hope it really come down to 21.3 in the next 1 month. So I'll put at 21.3. Then I just key in the password, then submit the order. Yeah, this is GTD, good to date order. So they can allow you to key order up to 1 month time frame. Is OCO just for CFD trading? You can see for stock trading, right, you only have a so-called limit order and stop limit order. But for CFD, you have the OCO order. That's I would say that's the different. Then there's an even more complicated order, contingency order. Like for example, contingency order, I would say I will do a short explanation, because you know that, for example, we talk about the 3 Singapore banks, DBS, OCBC, and UOB. So let's say I want to see if DBS actually reach OCBC reach a certain price. Let's say reach $9. I can't see the price now, so I actually want to buy DBS at certain price also. So these are contingency order. So because we know that certain stock they move together, so when you reach certain range, you want to actually make use of other stock condition to enter a trade. This is actually how you can actually make use of, or use different contract to actually make use of all these contract. So you can see when you enter a trade for OCBC, then you can make use of this contract to use a contingency order. I would say the contingency order is not so widely used because it's very complicated. Why there's, yeah, so answer this. Why is there a need to put a stop and a limit price? Okay, maybe we do go back to stop limit order. Okay, let's say just now we talk about CFD, we enter the position 21.66. So in case I want to cut loss at 21.3, let's say I want to cut loss at 20.3. If actually, because if I just key in this at 21.3, what will happen? You see that actually now the bid price is actually 21.65, is actually better price than 21.3. So in case I use this limit order to put as a cut loss, right? Instead, right, it will help me to straight away close my position at 21.65. So that's why when we want to put a stop loss, we need to use stop limit order. There's a trigger. So let's say I want to keep 21.3. So this limit order, right, will not become live. Only first thing you have to have a trigger for it, the order to come live. So maybe my trigger is 21.32. So only when order come to 21.32, right, then this limit order will come into the market. So that's why for stop limit order, you need to have a trigger and the limit order. If you just use normal limit order to key, right, the order will be straight away done and close off. Then it's not what your intention is. So that's why for stop limit order, you need to have a trigger and a limit order. Limit order is the actual order you want to trigger. And the trigger, usually what you want to keep the trigger is close to the actual limit price. Can Boyan select stop limit order GTD not just day? Only CFD is possible. Okay, if you go to stock, right? If you use stop limit order, it's just a day order. But for CFD, they actually have up to the stop limit order, you have up to the good to date. Yeah, this is a difference. Someone asked, can Poems Android can see all this technical chart? I would say that Poems app should be able to see, but usually I would say that I prefer to use a computer because all this, for example, you want to do charting, all this is easier to do on a computer than a mobile phone. Okay, where can I see the stock index? Okay, all the stock index, you just click under CFD index. The commodities will be here and all the different markets will be also available here. So EQ, what is different between CFD and EQ? EQ is stock, so you are owner of this underlying asset. But for CFD, you are only trading on the price settlement difference. You do not actually own the underlying assets. So for CFD, you are not entitled to so-called, because you do not own the asset, you are not entitled to go for those AGM. But for EQ, you are owning the asset, so you're actually entitled to go for this AGM, EGM audits. Currently, there's no CFD demo account. Okay, so one thing, maybe I should explain some detail. I think some people have asked questions about this quite a lot. How to transfer funds to CFD? First of all, you go to online forms. Then you submit, let's say you want 1,000. Then you, let's say, because this is a demo account, there's quite a lot. Let's say my CFD account is this number. I just key in CFD. Then after that, I press submit. Then key in password. Then they can process. So any orders that submitted 10 a.m. right will be processed the same day. By around to your CFD site, it will be around after around 1 to 2 p.m. you'll see inside your CFD. Then in case you want to check whether you trade for CFD, you need to actually pass your CKA, CKR in order to be eligible to trade for CFD. Then any outstanding position you have for CFD, you can see over here. Then if you want to see any intraday trade you done, you can make use of all these function over here. Account detail will tell you, okay, because this one demo account do not have any funds inside, so there's no detail here. Okay, so for online forms, let's say you already make profit, you want to withdraw to your bank account, you can also make use of an online form. You can actually either you want to deposit back to your bank account, or you can actually transfer back to your stock account. Then online account opening form, you can do it over here. So all these details are shown over here. So in case people are asking, how do you see commission charge for your CFD? All this, right, will be actually under your transaction history. So every month you have see all this transaction history, you'll be able to see all your commission, fee, and interest are be actually reflected over here under the transaction history. So have you seen any successful day trade? You are talking about intraday trader or day trader? Okay, successful intraday trader, yes, they are seen, but I would say that most of the time, right, when we see most people, they do not have cut loss. So actually, I'll say that you see more clients who make loss than making profit. Those who are doing well are doing very well, and I would say that there's no in between. Either clients are doing very well or doing very good. Because for clients who are doing very good, right, even though they are so-called, they may not make 100% on their winning trade, but they actually have a cut loss. So that's why just now we mentioned that's important, very important to actually have a so-called risk reward ratio and your cut loss strategy, cut loss and take profit position ready. So for a good intraday trader or a day trader, right, we see them actually they practice this kind of risk reward ratio, and also they try to optimize their winning rate quite closely. For clients who don't actually practice stop loss strategy, right, we tend to see actually they are losing. Most of the time they are actually losing on the long term, because they actually end up they may be making one trade, like maybe this trade 5%, 5%, but one trade, right, you can actually wipe out all their 10 trades winning because they don't practice any stop loss strategy. So it's very important to have a risk reward and stop loss strategy. Is there any time? Okay, I think I'll take another last 3 questions before we end this webinar, because there's quite a lot of things. In case you have any question, you can still find me inside the Telegram group. You can do further discussion. So is there any time frame to hold on a long or short CFD position? Actually, there's no time frame. It's actually once you reach or take profit or stop loss position, you just take cut or take profit. Is RSI and MACD sufficient to actually make a successful trade? Because yes, we do know that there are too many indicators. If you are using too many indicators, it get very confusing. So for me, if you ask me personally, for short-term trading, I'll use RSI. Then I also make use of potential support resistance level, Fibonacci, and also a bit of a candlestick. I do not use too many indicators, so I only make use for longer term. I will actually make use of MACD. So I will say that MACD is more suitable for longer term, not very short term, because you can see it's actually for MACD why their criteria, how they actually derive this, actually using the period time frame. So MACD generally I use for a longer term trading, not a short term trading. So let me see. I scroll through the question. I select one last two questions and see what is the most question that people ask. Oh yeah, just now I forget to mention, people are asking about market depth. Give me a moment. So you can actually make use of market depth. Is very, and this one is actually a advanced market depth. You can see it, other than volume, you can see number of trade. Maybe I'll choose some. Okay, so you can see actually number of order at this. And what people can actually make use of this market depth, right? You want to see actually price movement. So potential support level, usually you see it will be around 1.6 a lot of people are placing their order around 110 orders at the 1.6. So sometimes you see orders are very huge volume, but the order is only 1 or 2. So in that case, right, actually the order can be actually withdrawn very fast. In that case, right, that one might not be actually a good support level. You want to look out for support level when there's huge volume and also huge order. So you can actually make use of market depth. You try to study the market depth over the whole day. You can see actually where are the potential support and resistance level. Other than you can look at the chart. Okay, market depth is actually very interesting to look out for potential support resistance level. So I would say that please make use of the market depth. I think currently there's free market depth. Just make use of that when you're doing trading. It's very interesting. So market depth we can actually make use to see all these smart money flow, like where people are actually placing their trades. You can actually so-called copy or follow them also. So for Telegram, okay, the link to join for Telegram group I show you over here first. Yeah, this is a Telegram group. Yeah, so you see, just when we talk about market depth, there's possibility of a lot of fake orders. So people, that's why you can see, in case of very few orders, right? Like let's say you see there's $100 orders, then you see actually 10 orders, right? The time to actually withdraw this 10 orders is very fast. If you want to withdraw this 100, I think it's actually made up of many different people. Most likely, it's not so easy to actually straight away withdraw the 100 orders as compared to the 10 orders. So you can actually do a comparison of the market depth. From there, you can actually make use of that. So in case I come to end, so just to make a close off for this webinar. So in case you want to open an account, you can actually do it online very easily. I think just a few questions, make use of my info, you can fill up easily. There are some CFD trading promotion, top account opening promotion, frequent trader, and also refer friends. So you can keep a lookout for this. Then in case you are interested to look out for our past webinar, right, you can actually visit the CFD website, click on the education, the videos, then actually look out for all these webinars. Facebook group also have our webinars, YouTube also have our webinars. So for upcoming webinar, we are still actually in progress. I'll say that for upcoming month, we are still planning different kind of webinar because I haven't finalized the detail yet, so I don't share now. So for next month, right, we will most likely have 2 Chinese webinar that will discuss in terms of because we need to cater to our Chinese client, so we'll have Chinese webinar in terms of risk and also trading. Then also some other market outlooks webinars that you can keep a lookout, but you can keep a lookout for upcoming webinar under the case. So where to keep a lookout for upcoming webinars, I show you. If you come to Phillip CFD, so all the upcoming webinar we actually post over here. Then in case of any recordings, right, it can come over here. So our recent webinars will be like financial health, checkout of companies. Quite a lot of people like this webinar, so actually we always come up with this different topics. Then you are looking out for trading ideas, right? There's stock BNB. There's trading ideas also by our in-house TA research. So you can see all the technical indicators, right? You can come over here to look out for technical indicators, trading ideas over here. So like for example, what they think, what happened in the market, then you can look out for ideas over here. Then in case you are interested in fundamentals, right? Fundamentals, this over here, there's a lot of fundamentals. You just key in the company name, let's say DBS. I want to see what is DBS fundamental. This one is technical, then I see DBS also, they tell me what is the fundamental of the DBS. Then what is the potential price? What is the closing price? Then you inform me over here. Yeah, so other website is like SG Investor. There's also quite a lot. This one is more for analyst report. You can also make use of this. Let's say same thing, instead of just looking at Phillip, you want to compare all the different house. DBS. Let's say you want to see all the different analyst report. You see analysts say It will show you all the different broking house of the analyst reports. Then you want to see overview target price. So people always like to see target price, where is the ideal price to actually trade. So you can tell you all the different price. Just take note of the date that they come out with these reports. So I think I have come towards my end of our webinar. So in case you have any feedback for this webinar, please help me to do this feedback. So from there, we see how I can actually improve on the webinar and what kind of information or trading idea or what kind of things that you want to learn more about this. You can help me to do the feedback. From there, I can assist you. Oh, someone said, okay, let me see. Okay, let me, so just help me for the feedback. In case you have any further question for this webinar, you feel free to ask. If you are shy to ask inside the Telegram group, you just ask me personally. But do think that you ask me personally, give me a bit of time to answer, because sometimes there's quite a lot of clients asking me. I need time to actually slowly answer one by one. Yeah, you can ask me, approach me inside the Telegram group. So I think I've come to the end of the webinar. Just help me to do feedback, and also in case you have any questions, just feel free to ask inside the Telegram group or ask me personally inside the Telegram. Then from there we can do discussion. Thank you. I hope you all learned something useful today. Yeah, please make use of the free market depth in Singapore to do trading. It's very useful. And also get all the free live prizes. Don't waste all this.